Alright everyone, Cowboy Trades here, welcome back to the channel for another update on the market. So Bitcoin is pretty much a stable coin right now. Everything in the cryptocurrency ecosystem is relatively dormant for the past 50 days or so. However, in terms of the rest of the markets, things are starting to heat up. In the past 24 hours, we've got some new news events, economic headlines, etc., which have sent the VIX flying up 9%. We're going to discuss all of these key events today. We're going to discuss the news, the economic data, what's happening in equities, what's happening for Bitcoin, and more. Let's dive right into the content. Now, let's start off with the news and one of the most important headlines which has broke in the past 24 hours, that being that the big short investor Michael Burry, famous for conquering the 2008 financial crisis, has just shorted the market with 1.6 billion. Now, there's a few things you should know about this headline claim. Number one, headline claims such as Michael Burry just shorted the market with 1.6 billion are somewhat sensationalist because 1.6 billion represents the nominal value of the contracts in which he entered, and this does not reflect the amount of money that he actually spent to enter these puts. And while the price per contract was not reported, we can probably assume that it's going to be a fraction of 1.6 billion, maybe 5%, maybe 10%. Number two, when are these options expiring? Well, we know that these options are going to be expiring over on the 18th of November. They will halt trading over on the 17th of November during November's option expiration. This is 95 days out from today. So if Burry is still holding these shorts, this reflects a bearish sentiment on tech stocks leading into the next 95 days and into year end. Now, Burry isn't 100% short at this moment in time, and he is recently long bulk shippers, long oil, gas, prisons, banks, media companies, and as we know, like we just discussed, he is currently short tech stocks. The nominal value of these options puts, which he has taken out, reflect 93% of his entire portfolio, with 51% of that portfolio being in SPY puts and 42.5% of that portfolio being in QQQ puts. If you didn't know, the SPY is reflective of the SPX, the S&P 500, and the QQQ is reflected of the NDQ, NASDAQ. Now, if we move on to this options bar chart. While we're still on the topic of options, we do have major options which will be expiring over on the 19th, which is Saturday, and they will halt trading over on the 18th. So we've seen a lot of movement in the volume in terms of the calls and the puts in the options market. One thing that's very interesting is right now, the put to call volume ratio is actually diminished since our last video. This is pretty much at neutral, but if you do come over to the put to call open interest ratio, this is at 1.88, almost reflecting a 2x interest in options puts rather than options calls, which does reflect a bearish sentiment in the options markets. So it seems like Burry isn't the only person interested in shorting the market at these levels in terms of options puts. Now, if we come over to the S&P 500 and look at the flows and options sentiment over on Bloomberg, if we look down at the screen here, you can see in orange the put to call open interest ratio. Over on the left side of our screen, we can see with these histogram bars that we are currently trading at the largest bin cluster. This is basically the largest area of open interest in terms of price for the S&P 500 right now. Once again, reflecting what we just talked about, there's a lot of open interest for taking out puts at these levels for the S&P 500. The options market is thinking, hey, we're so significantly overpriced right now. This is an amazing place to take out some hedges and open some puts. Also, if we look at the put accumulation, this is now at all-time highs. If we now come over to our next chart over on Bloomberg, you can see that the options put to call skew is at the same levels as the 2021 bull market high. So if you are a bull at these levels, good luck. So from what we've seen so far, it seems like smart money is interested in taking out hedges at this moment in time and shorting the market. If we come over to the insider transaction ratio, this is currently not reflected in this chart as we are pretty much down at the bullish levels. However, this is predominantly a place where in bear markets we do see a reset. We have been tracking the purchases and sales over on the corporate insider transaction ratio. As you can see, recently all the way back up at these levels when the SPX was trading around about 4,580 to 4,590. This is when we saw the most recent offload where corporate insiders were selling their stocks, and we have seen 3 pretty bearish weeks to the downside ever since, and we do have some nasty volume coming in at this moment in time. As you can see today, the S&P 500 is breaking down quite strongly, down 1% with a lot of volume coming into the markets, and now we're going to talk about what is happening in these markets. Why is volatility stepping back in a major way? Why is the equities tipping to the downside right now? Let's dive right into this. So First of all, if we come over to the VIX, the volatility index for the S&P 500, you can see quite recently this has gapped up, and today, in the past 8 hours alone, we are trading up 10%. So why are we trading up so significantly right now? Well, I don't think it has anything to do with the Michael Burry news. More predominantly, Russia has raised their key interest rates by 350 basis points to 12% from 8.5% at an emergency meeting. Now, I'm not going to do any analysis on things like the DXY and the Russian ruble. The Russian ruble is currently kind of getting crushed by the DXY right now. Now, in the past hour or so, news that further pushed up the VIX came from this news article here, where Fitch warns of a potential downgrade to US banks, including JP Morgan and Chase, should the banking industry deteriorate further. Let's now move on to the cryptocurrency ecosystem. There's only one real news event that's come out in the past 24 hours or so, that being that former FTX CEO Sam Bankman-Fried is now heading back to jail. How is Bitcoin and the cryptocurrency markets responding to this news? Well, they don't really care. Bitcoin has been doing absolutely nothing for the past 50 days or so. So in terms of the higher time frames, guys, you know, everything that we've been talking about is still playing out. As you can still see, we still have this regular bearish divergence. Nothing's predominantly changed in the past, what, 1, 2, 3, 4, 5, 6 weeks since we detailed this up at 32,000. If you didn't know, the price made a higher high, oscillator been making lower highs. That's a sign of exhaustion. That is regular bearish divergence. In terms of the stochastic RSI as well, if we get rid of the MFI at this moment in time, what you can see is, like we detailed in the previous video, the stochastic RSI is turning to the downside. It is looking like a lot of room for a potential flush out to the downside could be made way very, very soon. In terms of the weekly as well, as we've been discussing, we have had that MACD fractal continue to play out. The histogram bars are widening over on the MACD as we have had this bearish cross play out a few weeks ago, and we're not really seeing too much in terms of price action in the higher time frames. As you can see, if we get rid of the MACD temporarily, we're still sitting in the main major area we've been detailing since, well, all the way back down here in April. We're still trading within the same range. We're still deciding what we're going to do with this big resistance box between 28,700 up to 32,000. As you can see, we've been ping-ponging up to the top of the resistance. We've been coming back into it, getting stuck at the top, bouncing a little bit on the bottom. We are still in a very, very tight range between 28,700 up to 32,000, and we're still deciding in the higher time frames, what does Bitcoin want to do? In the higher time frames, Bitcoin has not had enough time to decide whether it wants to say, hey, you know, I'm ready to break to the upside, I'm ready to flip this zone as support and come back up to the bull market highs and potentially make new bull market highs. It's also not quite ready to say, hey, we're ready for bears to 100% take over, flip this box as resistance and break down to the downside. You know, it's all well and good looking at the lower time frames. In fact, you know, I actually take that back. There's really nothing happening in the lower time frames. There's probably one thing that I could show you, but as you can see, if you come over to the 1 hour time frame, it's even more brutal. Everything is very, very stagnant right now. If I do come over to the daily time frame, I believe I want to show you it over on this chart. There is a potential inverse head and shoulders playing out at this moment in time, which is technically a bullish signal. However, you know, due to how much choppiness is happening in the markets right now, I would not be surprised if we have a slight move back up to the upside and really just chop everyone out of the market and then come back down to the downside. You can see this. This is the shoulder, this is the head, this is the shoulder. Would I be surprised if we do move back up to the neckline, potentially have another failed retest of this blue box here? As you can see, you know, this was the previous range that we were trading in. We were getting stuck in terms of candle body closes up at this region. If you come over to the 4 hour time frame, actually, I'm ping-ponging between the 4 hour and the daily. But as you can see here, you know, this previous range where we were getting stuck between these two blue boxes was the previous range that we were trading in. We came down to the downside of this, and since then we've had a few retests of this neckline over here. Now, would I be so surprised if we come back up to this level and retest somewhere between the blue box at 29,700, potentially as high as 30,000, 30,100 before breaking back down to the downside? I wouldn't. Now, if we do start to clear this 30,100 level and break above it, that's a completely different story. But due to the choppiness in the markets, I would not be surprised if bulls start to get excited over the sights of this potential inverse head and shoulders. The markets decide, hey, we'll chop them back up again and then we'll chop them all the way back down. This is what's been happening for the past 50 days or so. It's just, hey, we're chopping down, the bears are in control. Oh no, the bulls are back into control. Oh no, the bears are back in control. Oh no, the bulls are back into control. Really, bulls or bears are just getting snipped by crabs underneath them at this moment in time. And I know it's extremely boring. I know I've been relatively absent from YouTube, but I don't want to waste your guys' time. I don't want to look for something to talk about when, you know, really what I talk about on this channel are the main things that I think are important. Right now, none of this is important. This is just lower time frame chop. Nothing's happening. We're not even chopping enough that there's real opportunities to swing trade in this market right now. So there aren't trading opportunities. Nothing's happening in the macro. There's no important news developments which are happening. As soon as these things come back into the picture, of course, we'll be back with daily uploads. Until then, we're just waiting, we're patiently waiting on the sidelines for something to happen. I recommend to all of you, if all of you are heavily invested in crypto and, you know, your life evolves around crypto and you have to, you know, be trading every single day, you have to be looking at the markets every single day, you know, you're doing things wrong, you need to go find a different hobby, you need to go find something to do, go join a gym, go create a separate business, go do something else with your life other than trading, because sometimes these markets get boring and you need to have something in the sidelines to be working on while the markets are trading to the side. That is what I'm doing at this moment in time. I'm focusing on other things in the background. Right now, cryptocurrency, you know, there's only so much we can talk about. So let's move on from what's happening on the 4-hour time frame here. Again, you know, nothing's happening with the whale wallets. We are still trending sideways from the lows. Predominantly, like we said earlier, in terms of the equity markets, we are seeing more interest in puts at this moment in time and shorts for equities. The addresses with more than 1,000 Bitcoin, aka the whale wallets, aka smart money, institutional money, are still pretty much down at these lows, with the retail to institutional addresses coming up to new all-time highs. So really, there's not much interest in terms of Bitcoin right now in terms of the smart money. Now, if we come over to our last few charts, I want to show you something. If we do come over to the IWM, remember we talked about this in our previous video, Bitcoin and S&P 500 rally is over. What the IWM 2000 is it basically grants you access in an ETF to 2,000 small cap companies in the US. Kind of like the S&P 500 is supposedly the top 500 stocks in the equity markets. The IWM 2000 is, you know, small caps in terms of US equities, and this has been brutally getting snatched down. I believe the last time I checked, this was down about 5.5%, while the S&P 500, they don't have a 1-to-1 ratio, but, you know, this, you know, 5% to 3%, it definitely looks like the S&P 500 should be following suit back down to the downside. You can see a very clear linear correlation with these two charts. I'm not saying the IWM is a leading indicator for the S&P 500. I'm not saying the S&P 500 is a leading indicator for the IWM. Often these move in tandem, and sometimes one of them moves a little bit quicker than the other one. But due to the nature of the recent S&P 500 rally, being that the S&P 500 is predominantly being held up by the upper echelon of tech stocks, and small cap growth is absolutely not there. I mean, guys, look at this. The S&P 500 is not too far away from its previous all-time highs. This is because of stocks like Microsoft, Apple, and Nvidia. If we're looking at the small caps, they are absolutely still in a bear market. In fact, you know, really this looks like an absolutely monumental bear flag playing out on small caps right now. And I think once small caps really get geared up for that next leg to the downside, we could definitely see the S&P 500 fail in its path and start to rally to the downside. And with small caps not holding up so well with the economy in doom and gloom once again, it could look like the S&P 500 and even the upper echelons of tech stocks could start to have a significant reversal back down to the downside. Now, today, when the VIX shot up to the upside, we actually nearly saw a new all-time high in terms of the US 10-year government bonds. And it's the same pretty much across the board. Government bonds right now are severely coming to the downside, which of course means the price of government bonds go down, the yield goes up. 10-year government bonds through the roof right now, almost at new all-time highs. A couple of weeks ago as well, we saw new all-time highs for the 2-year government bonds. And once again, if we're looking at the prices of the government bonds, they are kind of coming down significantly right now at some very weak levels. With bond yields soaring through the roof, you can obviously expect the iShares TIP ETF is getting beat down once again. We have broken down from this bear flag as we've previously been detailing. And as you can see, if we do mark the bear market lows right down here, we are very, very close to coming down into new bear market lows for the iShares TIP ETF. If yields just take a little bit of a push back up to the upside, some of them come back up to new all-time highs, we could definitely see the iShares TIP ETF start to break back down to the downside. This will be a leading indicator that the bond market is obviously once again bearish on equities, and we should see that next dip back down to the downside. If we do see a breakdown from the iShares TIP ETF, we could potentially drop about 2.5% down to 103.05, of course placing us in impending doom, also known as new bear market lows. Now, the DXY as well, like I've been saying, guys, Bitcoin, the equity markets, the DXY, they're all at a very critical level right now. And of course, I can't forget, we just talked about these government bonds. They're at a very critical level. They're coming up very close to making new all-time highs, if they haven't already. I'm looking at you, the 2-year government bonds. However, in terms of the DXY, we have just bounced in the higher time frames on this massive support box that's been resistance since 2015, resistance in 2016, resistance in 2020, and we're now holding it as support. However, we do have this major area of resistance, which has been resistance since early 2017. It was resistance in March of 2020. It was resistance in 2022. And right now we are retesting it as resistance. So whether we manage to clear this and see the DXY break up to the upside could be leading towards the fact that the S&P 500 could be coming down for new bear market lows. If this gets rejected off this level and breaks down to the downside, that of course could mean that equities have more growth to the upside unless the US enters a recession. If the US enters a recession, then typically, if history is any indication, then equities, the DXY, will all fail at the same time. But unless we have a recession, we're looking at the linear correlation between the DXY and equities. We're at a very critical tipping point. This is not only a critical decision time in the higher time frames for the DXY, it's a critical decision time for the equity markets, for the bond markets, for the cryptocurrency markets, and also, guys, the inflation in terms of the CPI numbers. Remember, 1 month ago, we told you that the linear downtrend where CPI year over year was going to end and inflation, also known as the CPI, was going to bottom in June. And that is what we saw. We saw an increase in the CPI from 3% back up to 3.2%. This was only a small increase, but as we detailed in this video, literally for the next few months, all the way up until December time, we are now going to be measuring CPI year over year, not from a parabolic uptrend, but from a completely flat basis point all the way up to December. So if we come over to CPI month over month, we've been averaging between 0.2 to 0.3% CPI month over month. So if right now we're sitting at 3.2%, if we continue even with this low estimate average of 0.2% CPI month over month, we're going to see what we're at right now. We're at 3.2%. We're going to start seeing 3.4%, 3.6%. And I personally think this is going to start climbing back up rapidly. I think we're going to start to see some readings higher than 0.2%. And as we detailed in this video, which I won't dive into too much detail in this video, I think CPI is going to be heading up throughout the year end. As I detailed in this video, if you want to go check that out, make sure to go check that out. In the video, we detailed that I think the CPI index is going to come up to round about 314 approximately. This is just an estimate average based on how much we've been moving up month over month. So if we are now looking at December 2022 and we are, taking an estimate of where CPI could be by the year end, I think it could come up to 5.6%, and that's a conservative estimate. We could go a little bit higher, we could go up to 6%, we could go a little bit lower, we could go down to 5%, but regardless, like we detailed in this video, I believe that inflation has bottomed in June, and I think the CPI is also at a very critical decision time where the year-over-year index is likely to start heading back up, just like the CPI index, not based on a year-over-year basis, is going to continue increasing. This is continually making new all-time highs every single month. I know the markets are boring right now. I know in the higher time frames we are patiently waiting for this macro decision to take place. Once there's more economic data, once there's more news, once the markets are moving once again, don't worry, of course, we'll be back with more frequent updates. Until then, like I said earlier in the video, go find something else to do. If you are looking at the cryptocurrency charts every single day and your entire life personality is based around the cryptocurrency charts, you're going to end up pulling your hair out because it's very, very boring right now. When the markets are interesting, we'll be back with the daily uploads. Until then, we'll see you in the next one. It's been your boy Cowboy Trades. As always, you know what to do. If you enjoy the content, make sure to let me know in the comment section down below. Leave a like, turn notifications on, share the videos with your friends. I'm out. Peace.